This is Just AMZN on Wednesday, June 26th, 2019. Today we had a pretty big gap back up, but it's inside of this much larger bearish candle. Came right up into resistance of this downtrend line, resistance of the 5, and I mean, that's about it. I mean, today was a really small candle, 1648 on the range. Looking at the 5-minute, you had this initial buy up, high wave candle that triggered up, triggered bullish, and then from there it was just down the rest of the day. I mean, making lower highs up until about the last hour of the day. You had this triangle that came right into, right in between the 5 and the 21, and that broke down. Looked like it was going to bounce off of this 1893 price. Instead, it made this inverted head and shoulders that some people took bullish here, or that was right at the neckline. Then that rolled over. It made a slightly new high in the day here, and a new high here with a high wave that then continued lower. And after this candle came in, kind of a good buying candle. 20 minutes of stair step, then broke bullish, came right back up into this 1893 price, started roll over there, and then just rallied into the close. And so these smaller ranges, it was just much harder to be set up for the trade. Probably the opening candle was the best setup if you're looking at setting up a trade. I'm like, this is the 1900 calls. I had a hard time finding decent options that move well, that weren't too far away, and still a decent value. Like, I didn't like these smaller wicky kind of sideways kind of candles. They're not even candles; they're just little lines. Anyway, I don't like seeing a lot of those, and it looked like there was quite a few. But still, opening up here on the 1925 calls, this I mean, it's right at a dollar range. So you could have done like 450 by 350, but that didn't even make it up to 650. So you didn't even get 2R on that kind of a move on the 5-minute, like this, where it's like, oh, this is a great candle, we should continue higher. Nope, it didn't continue higher. It just consolidated back down and rolled back over. And so had you held through all this, it's like you may have been eking out like an R up here, or getting out for like break even right here as it started to bounce. It's like, okay, I'll get out, I'll get half an R, and then it just rolled over and would hit the stop and then rolled over again from there. It wasn't until later that it was down to the point that, okay, it's putting in consolidation here. It's only moving within a range of about $50. So either take it on a breakout or get in, looking for it to continue higher. But I mean, there wasn't any reason that it couldn't go down again. Even right here, it's like the stair step here that probably should have broken bearish, and we continue down to 1880. It just didn't happen. So it's I guess the question is, this is a bullish gap. It's inside the previous candle. We got back above some of these resistances. We still held a higher low, but we also had a lower high. But it's this kind of consolidation, sort of V-shaped candle that we need to continue higher. And I still see a lot of bearishness in here, and we'll find out tomorrow or Friday if we do pull back some more. I don't think it's out of the question to pull back into the 21 in here. If we get a gap down, here's what will be really interesting. If we can gap down and open up either right on this at like 1894, actually probably 1893 would be better. Gap down a little bit lower, even below the open from yesterday. If we can gap down, I think this is a one black crow. It opens and closes below the prior day's close, and then if we can do it again tomorrow, we would be getting another one here. And it just is really bearish to have those lay out the way. So we'll look at that again tomorrow and see if the candles are pulling back like that. But on our way up here, we had a number of candles that just consolidated, made these larger triangles. This already went pretty tight, pretty quick, and it really could go either direction. It could break out or could break down, and most likely, whichever direction it breaks from, going out the high or out the low of this candle, is, like I said, likely the direction it should go, as a continuation up or as a breakdown and continuing lower, um, with all this resistance overhead. So I was looking back, trying to find where like the 5 came in and dipped like this, and then held its resistance. And there's maybe like this one here where it's dipping, but it dipped here, and then a few days later we're coming back and we're having the 5B resistance above this and kind of a little bit above the close here. I was just looking for something right on the close and didn't quite see what I was looking for. But if you just compare back to what we saw recently enough, um, having some resistance here or like this one and a gap down the next day. And so I don't want to say I'm counting on that, but it looks very possible to have a gap down bearish candle tomorrow. And so if it does that, look for a smaller option that's a little bit out of the money, 1875, maybe 1850, and put on your appropriate risk, risking your R, your risk level for what you would take either as a zero or being able to do that directionally. It's got to be moving directionally for that to really be the right option to use. And if it's starting to move down and then gives you that S curve, that's a great place to be getting in. Today, it was just really, it was hard to play that. So we had this consolidation breakdown. Here's your S curve, and it started to roll down. It just didn't really continue. This range here from this high to this low looks similar to like this high to this low. And so it was really a range on day, and so because you didn't have that follow through. So that's what I'm saying. If we can gap down and do something like that tomorrow and have some more follow through, then we should get some of these options that are out of the money into the money or at the money, and kind of see how things play out. Now, if we go bullish, you got to have a bunch of buyers come in, push this higher. It would be nice to trap some of these bears on its way up, whether you gap up above this candle, gap up to like 1915 or so, continue up higher. But then you've got the 1925 price as resistance. You got a number of these candles here as resistance. And so you also have this downtrend as resistance. Now, again, it's not as clean. It's really cutting through these, but you can see there's a clear support here on these 3 candles, and now we're below it. So because this is where we're actually below it, doesn't mean we're going to just continue to crash lower. It just means be cautious, that there's some resistance that's really key just above here. So I guess we'll kind of see how things play out. Again, look at the options. 1925, you would have had to wait till late in the day to be buying down here. On the 1900 puts, these are more expensive. You could have been setting up, to buy a low through here. It came in around 1350 a number of times. That ran up for a few hours. That one's much more expensive. And then, oops, oh, it's going to do that again. I was doing something and I had to retype the whole thing. If there's something you type in yourself, just make sure you put the period in the front so it recognizes an option in Thinkorswim. And there we go. So this is the 1875. I really did not like this option just because you have these just sideways lines and you had a bunch of them. And that just means there's incredibly low volume, like 1 contract here, 16 here, 1 here, 5, 4, 5, or 5, 5, 4. There you go. So it was harder to say, okay, this is the option I'm going to make my R's with, because first of all, to do this, it's really spready. It's not really moving too well. And so you need something with more volume. Well, at least I think you need something with more volume, so there's some more liquidity. But also it keeps it keeps that spread smaller because there's so many more people trading it. The market makers, they'll get that spread on more contracts by more people rather than making that spread wider for fewer people and fewer contracts being bought. So at least that's how I think through it. So anyway, just looking at the 1875, it was a little bit harder to buy down here. I mean, it made some lower highs, came to this, making a higher low. These prices are around 550 by 5 could have worked, 6 by 5, but if you got into 6, I mean, it didn't even make it to 8 here. It did make it to 8 here. So maybe once you went from buying to being up, 2R, but did you try it here and it came back down? Did you try anything? So it's a matter of, okay, what was your setup to do that? When was your setup to do that? And then figuring out, okay, is this really the best way to play it? And so um, we got to keep looking back at what's actually happening right here in the chart. This is a really nice small triangle. This thing to me looks like it should have gone bearish, getting in anywhere up here or getting in this retest, and probably just snagging an R or half an R on something like that kind of move. But I can't really. It's harder to show you the option. Like, oh yeah, that definitely would work today. It was a harder day to do options, and so be careful those days. That's all. So like I said, we'll see what happens if we can gap down or gap up, or just kind of be another small inside candle for tomorrow. We'll see if things go. So I hope this helps. This is Justin Amazon.